All right. Hello, everyone. Welcome back to another market analysis video. We had a pretty interesting week in the markets. As we can see, we came up and, got some bulls on board for a potential breakout. We recovered this down move like it was absolutely nothing. Bulls came in and, made it seem like everything's okay, everything's all right. Kind of just moving sideways like we're going to go higher. And they dropped the market at the end of the week. Here's an hourly chart. We can see nice high volume breakdown. If we actually go down to an intraday, this was a bit of a mini flash crash. Here's the 5-minute chart. We can see this happened very, very quickly. Buyers did step in. However, there was a gap down. The market really needed to stay up here overnight to have any chance of continuing higher. Bears did take control overnight. They broke this flag off the open, sending the market down a bit more. We can see the market did try and find some support, but it really was not much of a support down at these lows. We just continued sideways, and we kind of traded lower into the end of the day with some short covering or maybe some algo hedging at the end of the day here to push the market up. This up move here is not very bullish. If you go back in time to other times where the market came down, usually at the end of the day, if it was more bullish, you'd see a pretty massive short squeeze. Now we can see that early next week, and so the first thing we have to look at, we are above all the moving averages, and we have to ask ourselves, what is the market doing on a larger scale here? On a daily chart, right? We're simply retesting a breakout area. So we have a pivot here. You can see the market struggled around this area. Right here, we gapped up, struggled around the prior highs, and we broke up, right? And, they make it seem like it's okay, like we're going higher here, and they bring the market down. But you have to look, and just from a common sense perspective, what are we doing here? We are retesting this breakout area. Pivot, struggled, breakout, come up, fail, but we're just testing the breakout area. The market likes to come back and test these breakout areas. So early next week, this zone is a good spot where the market can see a bounce. Now, we can't assume that this bounce is going to go to new highs, but we have no reason to assume that it won't. The market is in an uptrend. Yes, it's pulling back. Yes, it seemed very scary, and many people are, getting fearful, but you have to tune that out. Look at the market's big picture and look where we are at on the chart. Not that this can't lead to a further correction. We'll go over what that would look like. But for now, the market can see early upside simply by testing this breakout area and bouncing. Now, then we have to judge when it bounces, what is bullish and what is just a dead cat bounce, right? And to me, the big thing I'm seeing here is we were in a range. We were in a range, and it's now become a supply zone because we were in a range and we dropped out of that range. When you have a rally and you create a range, here's essentially the range. It's not going to be perfect here, but here's your range, something like that. We were in a range. We had a fake break up. Here's your fake break up. They bring the market down on pretty high volume, and they cut down below the range. So, in my opinion, you have to get back above this breakdown area before the market can really turn bullish again. Obviously, that's like long-term bullish. We can see a bounce, and we should see a bounce as long as the market does not see a large gap down over the weekend. You'd expect a garden variety bounce at this area, right? It's a former breakout area. It's This is what you have to look for, is a mix of breakup candles, a mix of gaps. Here's a gap. You can see we gapped up and we've come down here. We haven't gotten back down to the gap. So anywhere around this opening range low area, this breakup area, there's pivots here, there's a gap just below. Here's another breakout area right down here. So there's so many reasons why within the 331 to potentially like 329 area that we would see a bounce in the markets. And if we go over to some other sectors here, let's look at the XLF. The XLF, right? What is it doing? It's simply in a range. It's simply in a range. We have two trend lines here. It's a bit of a flaggish pattern. If you want to call it a wedge, you can. But there's nothing really wrong with this chart. Recently, we've been in a range right here, and we're still above moving averages. The key thing to watch on the XLF here is this top level. If we do start getting below this top level, this 30.45, then there's probably something else going on. We'll probably visit the bottom of this trend line. Obviously, we break that, we are likely headed quite a bit lower. I would assume we would likely come back and, again, break out areas. 1, 2, 3, 4 pivots, breakout. Have we come back to test that area? No, we have not. Is that very possible to happen? Yeah, it definitely can happen. It doesn't mean the market is going to go crazy bearish, but that is a sizable drop. That would be a correction that the market may need. But again, look at it big picture. We have a range here. We break down, we recapture the range. Where are we again? We're back inside this range. So as long as we hold this 30.45, the XLF can chop around sideways for a few weeks. We don't know. That may not happen. That may happen. But there's nothing wrong with this chart. This is a chart moving sideways, looking to go higher. That's just what we have to look at on the big picture. Let's break it down a bit. This chart doesn't look as good on a lower time frame. You can see that we have clear supply up at this level. There's a lot of sellers, decent volume coming in on these sells too. What do we have? We have a down move. We have a lower high, a pivot, and we have another nice high volume breakdown. And we can see we're kind of just going sideways. Are we just bear flagging? On this chart, what we'd really have to get above, in my opinion, is this pivot that we made right here. You have a drop, and you have a base, and you have another drop. So we've created supply here at this 31 level, 31.10 right in here. So if the XLF comes up here, it's very possible to reject again down to this lower gap. So shorter time frames are showing some weakness in the XLF, but always keep in mind daily chart looks fine. When we look at weekly charts, we're still above moving averages. Can we just come and dip and test this weekly breakup candle and then bounce? Absolutely. So nothing long-term bearish yet on the XLF or on many charts for that matter. Still looking okay. The IWM, good market leading indicator. This one was a bit tricky this week. The market was down here on Thursday, and the IWM had a crazy recovery and actually closed at the top of its range. If you go down to an hourly, we can see the IWM, it's a sloppy range, but it's in a range, right? Maybe you want to draw the bottom of the range down here. So maybe we could come down to the bottom down here, but this is still a range. There's nothing technically bearish about this chart, right? We're still just in a range, but again, we have these breakdown candles that we didn't really have before that are, pretty good size, but we can't really make too much out of them because we are still in a range. Daily chart, we're above the moving averages, right? So what do you really have to have happen to turn this bullish? You have to get above the range. The top of the range would be the close of this candle here. 169.07, that's our gap. We filled the gap and we are trading away from the gap. On the bottom end of the range, we have a gap that is not yet filled. Can the market fill that gap? That is the pink line, right? Very important level for the IWM to stay over if the market is going to just dip and remain bullish. If the IWM starts getting under that, we have a lower high scenario. Do you want to call it a head and shoulders maybe? But where would we likely come? You're likely going to come a lot lower if we get below this zone, right? Whenever you have a market that's in a range and you are building up energy to make a move, essentially, right? You have a market that's in a range and boom, you get a final break of the range and you get a 2-3 day move, sometimes longer, that expends that energy in a certain direction. If the IWM is going to break this 10 plus day range, it's going to get a decent move whichever direction it goes. So be watching for that potential break. Again, we have a former breakout area here. The market cannot turn bearish unless the IWM really starts getting below that area. So you can see 1, 2, 3, 4, 5, 6, 7 pivots. We've come back to test it once. We're making a lower high. Can the IWM simply go like this in a big range chop for a few weeks? Absolutely it can. That's what I would expect. Remember, we have elections coming up. Is it likely that the Fed and Trump is going to just let the market fall out of bed? No, and we have to remember that. We have to remember that we are in a manipulated market and we have to play with that. Should we be expecting some crazy crash right now? No, right? We have to tune that fear out of our heads when the market turns red because it's just not very likely. But again, short term, we have a potential lower high if we break down out of this range. But as of now, nothing really wrong with the IWM. Let's look at the transports. The transports are pretty similar to the IWM. Long term, I don't like the transports quite as much. We have this supply zone that we've been talking about for a long time. I changed my charts up a little bit. It used to be red. Anyways, we have this pink supply zone. We have these trend lines essentially creating a massive bearish wedge pattern that would break to the downside. What do we have right now on the weekly? We have an inside bar consolidation pattern. Every bar for the last 3 weeks has closed inside of this red bar. We have long top tail candles. This is showing bearish sentiment to me. This is showing that the DJT wants to break lower, wants to test this bottom trend line. And this can be a big market leading indicator. It can give some good hints as to where the market really wants to go. But again, like the IWM, we are simply in a trading range shown by this gray zone. And we can't just guess which way that this is going to break. We need to wait for the market to confirm. Whenever you take a trade, whenever you're doing analysis, don't try to guess when a market is in chop. You don't know. Nobody knows. We can make educated guesses, but the best thing if you actually want to take a trade on something is to just wait for the market to show you what it's going to do. The easiest money is made after the market tells you what it's going to do. Sometimes there are fake outs, yes, but 80-90% of the time, wait for the market's confirmation and then enter your trade, and your success rate will be much, much higher. Do not guess what the market is going to do. Let it show you first. So we're in a range. Don't pay attention to the moving averages at all. They are not important. We are just chopping around them. We are below supply. We have to take that as bearish. We have to take this as a bear wedge pattern. We've come down. We have gone sideways / up. This is setting up to go lower until we get back above the supply zone. We have to look at it like that. it's a down move and it's sideways, and a market that goes down and then sideways typically wants to break lower. Obviously we have pivots here, and the trend line would come in very close to those pivots now as the trend line is rising. So it's very possible we just dip down, come back up, and continue sideways just like the IWM might do. Okay. Lastly, the worst looking sectors are tech. So we're going to look at the SMH, which are the semiconductors, and the Qs. These are the worst looking sectors. We've had this trend line on the chart for a while. Obviously, you don't know when it's actually going to make a top. We had one top here. It was pretty short-lived. And we have another top in the making here. I'm not going to say that this is an easy chart to read. It's a messy chart, right? This trend line is pretty much all we have. This chop is a ton of mess. It is what it is. You still have your breakout zone down here that is untested. The SMH closed below this gap. It closed below this range, so we had a bit of a range right here. We broke down out of that range. I see that as weak, but here's the deal. The SMH, like the other sectors, is at a spot where it can bounce early next week. You have a break up. You can see this level is incredibly important. Look how the market runs up to it, toys around with it a bit, gets over it, back under it, over it. Like, you can tell how important this level is to the market, to the SMH, that is. So I think this is the number on the SMH to be watching. You gap below that number, you're going down to fill this gap. You get below that gap, likely going to test this breakout area. This would be a I'm buying the SMH area right here. Whether it's for a few days or for a longer rally, it should see at least a couple of day rally off of this zone, because it's a massive breakout zone and it converges with a long-term trend line. Here's your trend line. Nice few touches there. And yeah, you have a perfect, beautiful breakout area. You rally, you base, and you rally again. So there's going to be a lot of demand for buyers in this zone. If we happen to find the SMH down near 134, definitely look to buy the SMH for a few day rally upwards. Okay. The Qs. It's another one that's interesting. The Qs have not really seen much downside with the market, right? But again, we have to look at it for what it is right now. And it's simply a pullback, right? What was everybody thinking back here? Do you remember this pullback here? Do you remember what everybody was thinking about the market? Everybody was scared. Everybody was saying, oh, larger pullback. What about on this day here? Did everybody not think that the market was going to die and fall out of bed? Yeah, they did. But, had we broken trend yet? No. And that's the thing you need to keep an eye on. Nothing here is incredibly bearish until we are breaking these uptrends. Right? We're not breaking the uptrends. We're not below the moving averages. So you can't just go out and say this is a top. I think we're going to fall to X point. You don't know. I don't know. Nobody knows. So we have to take the market for what it is. Here's the identical breakout area on the Qs to the SPY. We have, right, this rally up. We have a pivot. We struggle to get above, and boom, we gap and go above that pivot. So there's a couple areas. There's this breakup candle low. It lines up right with the 20. That's the first area where I would expect garden variety support on the Qs. You gap below that, you'll come right down here. What is better than a breakout area? You have gaps, you have breakup candles, you have two trendline convergences, one very long-term trend line, and you have this from the bottom of the rally here that will converge right around the same area. So what are the chances, as long as we come in quickly? The key with these balance areas, guys, you have to come in quickly. If we come right here and for 2 days or 3 days, we just chop around right here, that is no longer a valid bounce area. The market needs to come into these bounce areas rather quickly. If you come and sit above them or sit at them for a couple of days, the chance of it going up is less likely, because as price stays down here, you get the signal that the market wants to probably go lower. So just be watching this area. This is another reason why the market can see an early weak bounce. And yeah, again, you're looking just like the other markets where we broke down, we come up and we make a bit of a right head, and here's the shoulder and here's the shoulder. So if we do come back up towards this area here, obviously the moving averages will be up here. You have breakdown candles. So this is a good area to look for overhead supply if we are going to continue down and the market does get a bounce. Be watching these areas on these charts, right? We had a range, we broke up, we broke back below. Do we stay back below that range now? Do we come up and reject the bottom of that range and keep going lower? That's the area to watch on these charts for this week. One last look. Let's just check out the ES weekly. This is the continuous futures chart for the S&P. Here's your weekly chart. You have an inside week, perhaps signaling some more downside. We are pretty extended from the 20. This does look like we are starting to kind of get a bit of a wedge, a bit of an up and down type pattern. But remember, topping is a process, right? Look at the tops back here. Look at the tops here. It's a big process, right? It's not just going to go in a straight line. So we can't expect it to go in a straight line, right? We are at support. There's many reasons why we can see an early week bounce next week. We have to be aware of that. Weekly chart above all moving averages, simply had an inside week. The one thing I would note is this high right here. We did break up and now we are back below. I see that as a fake breakout. Doesn't have to mean put all your cards in it, but it is something to note. We had a bit of a breakout and we failed it. If we get below this week's lows, expect to see quite a bit of downside. So you're looking at 3303.5. 3303.5. And the reason that's important is because when a market breaks out of an area and is looking like it's failing, you want to look, where did the breakout start? The breakout started at the low of the breakup candle. So if the ES gets below that level, you want to watch out, right? Because you see you have these pivots, you have this nice low made here. You get below there, look what happened when we got below that level here, right? You got in trouble. You get below that level again, you might be in trouble again. So watch that 3303.5. I think that will be very big for this week. That could be a very nice bounce area, or we could get further bearish signals on a break of that level. Okay, that's going to be it. Thank you guys for watching. Please like, sub, check out the Discord link and the Instagram link in the bio. You get a free week of Discord, your free week with us, live voice chat, live trading, and we will absolutely help you improve as a trader. So check that out if you're interested, and I'll see you guys in the next one. Thanks for watching. Peace.